So how in the world does someone even try to predict the future price of something as wild and unpredictable as silver? Well, today, we're going to pull back the curtain. We're taking a real 30-day financial forecast, and we're going to deconstruct it piece by piece to see exactly how the pros do it.
Okay, let's get right into it. Before we can even think about looking forward, we've got to look back at where we've just been. And for silver, the start of 2026 was, to put it mildly, an absolute white-knuckle roller coaster ride. I mean, just look at this swing. In late January, silver just explodes to an all-time high of over $121 an ounce. But then, just 1 week later, it completely falls off a cliff, crashing all the way back down to the low 80s. That's a drop of over 30%. This is the kind of insane volatility that makes forecasting so challenging and so fascinating.
And that's the big question, right? After a move that dramatic, what on earth happens next? This is exactly what professional analysts get paid to figure out. So let's follow the clues in their report and see how they build their case for where the price will be on April 14th.
Okay, our first set of clues comes from what analysts call the technicals. You can think of this like a kind of financial forensics. We're basically crime scene investigators, and we're examining the price chart itself for footprints, for patterns left behind by buyers and sellers.
So what is technical analysis really? Well, the core idea is actually pretty simple. It's the belief that all the known information out there, all the news, all the economic reports, it's already reflected or baked into an asset's price. So by studying that price action, you can start to see patterns that might just hint at where it's headed next.
And two of the most critical concepts here are support and resistance. The easiest way to think about it is like a room with a floor and a ceiling. The report identifies a support floor down around $80 to $84. That's where buyers tend to step in and say, nope, the price is not going any lower. Then you've got the resistance ceiling up around $88 to $90, where sellers tend to show up and say, hold on, not so fast. Right now, the price is basically bouncing between these two levels.
Now let's zoom out for a second, because this is huge. The report highlights something truly historic that happened. Silver broke above $50. Now, this wasn't just any level. This was a ceiling that held prices down for 4 decades. The report calls this the single most important technical event for silver, maybe ever. And the theory is that this old, stubborn ceiling has now become a new, super strong, long-term floor.
All right, let's move on to our second clue. If the technicals tell us what is happening on the chart, the fundamentals tell us why it's happening. These are the real-world forces, the economic motives, that are actually pushing and pulling the price around.
And this slide gets right to the heart of what makes silver so unique and, honestly, so tricky. It has a split personality. On one hand, it acts like gold. It's a monetary metal that people buy when they're scared. But on the other hand, it acts like copper. It's a crucial industrial metal needed for everything: solar panels, electric vehicles, you name it. This dual role means there are a ton of different factors influencing its price.
So what's got the wind in silver's sails right now? Well, according to this report, there are 4 big things pushing it up. First, the Fed is expected to cut interest rates, which is usually good for silver. Second, you've got geopolitical tensions flaring up, which sends investors running for safe assets. Third, people are just buying more physical silver. Demand is way up. And finally, there's a simple supply and demand problem. We've used more silver than we've mined for 6 years straight.
But out of all those factors, the report puts a big, bold underline on this one. For the next 30 days, they say what the U.S. Federal Reserve does is the #1 thing to watch. The thinking is pretty straightforward. When the Fed cuts rates, it tends to make the U.S. dollar weaker. And historically, a weaker dollar means a higher price for silver. It's a classic seesaw relationship.
Okay, we've looked at the chart's footprints and we understand the motives. For our third and final clue, it's time to call in the expert witnesses. What are the big banks and the top analysts on Wall Street saying?
And as you can see, the experts, well, they don't exactly agree on a single number. You've got Citigroup on the more cautious side, calling for around $70, and then you have others who think we're going to see a test of $100 again. The futures market, which is like a betting market for pros, is pricing in a year-end value just a bit over $91.
So, the key takeaway here isn't one specific price target, it's the general vibe. And despite the wide range of opinions, that vibe is definitely bullish. Long story short, the prevailing belief is that the path of least resistance for silver is up, not down. All right, we've gathered all our evidence. We've got the technical chart patterns, we've got the fundamental forces, and we have our expert testimony.
Now it's time to put it all together and map out the most likely paths that silver could actually take by our deadline of April 14th.
The report boils everything down to 3 possible scenarios. The base case, which is considered the most likely, sees silver just kind of chopping around in that $80 to $88 range. The bull case, where it rallies toward $100, would probably need a major trigger, like a serious escalation in global conflict. And the bear case, where it drops to 70, would need the opposite to happen. Tensions cool off, and the dollar gets surprisingly strong.
And here's how the report assigns the odds. That base case, the stay-the-course scenario, gets the highest probability at 45%. But look how close the bullish case is, at 35%. That's a pretty strong vote of confidence that the next big move is more likely to be up than down. The bearish case? Well, that's seen as the real long shot here.
All right, this is it, the moment of truth. After weighing all the clues, considering all the scenarios, and running all the numbers, what is the report's final verdict? What is the official forecast?
And there it is. The final call is a tight range, between $84 and $87 an ounce. So after all that, the report lands on a price that's, well, pretty close to where we are now, but with a slight tilt to the upside. It's basically a forecast for a bit of calm and stability after the absolute chaos we just saw.
Of course, the real million-dollar question is, will they be right? And the truth is, a forecast is nothing more than an educated guess. Its accuracy is going to depend completely on how those clues we just investigated, those chart levels, the Fed's next move, what happens overseas, how all of that actually plays out in the real world.
And that's where I'm going to turn it over to you, because the real value here isn't just knowing the forecast, it's understanding how it was built. You now have the checklist. So on April 14th, you can be the judge. You can pull this up and see for yourself. Did the price land in the range? Did support hold? What happened with the Fed? You have the framework to see what they got right, what they got wrong, and most importantly, why.